secure payments across social media. So it pays you in the Rapids coins with the blockchain technology. It's a brand new project, but already making some heads turn with its two-tiered POS system with staking nodes and master nodes. Tip bots on social platforms and transparent team with no ICM. Bringing value to social interactions, and you can earn while you hodl. So it does help you hodl your
Stoppable.
Very cool. If you pass it around, take a look. Just what else? I'm going to do more on them, just other meetups. Hey, how are you?
Good, how are you?
Nice. Hey, good, thank you.
Nice.
Apollo Currencies, I met the team down there. Good team, interesting what they do. You can take a look here as well. Are you familiar with Apollo?
No, I haven't heard.
Oh,
I've heard
really?
about them a lot.
Yeah, okay.
My buddy's always like, look at them, bro.
A privacy coin. It's a lot of security on the Apollo. Private transactions, public transactions, IP masking, IP encrypted. So the Tor technology, coins shuffling, encrypted messaging. It goes on, and John McAfee really promoted them a lot. Yeah, so take a look at that. And there's some cards for Apollo here. You can grab some if you want any. There's either one of you guys each take one. If you want to here's for my recovery phone, those are your private keys to record your private keys on, so you can all have one of those. And just some information up here if you want to take a look. DigiID, they were there. Digibyte was there. And another company called Change Angel. I didn't get to learn a whole lot about them, but I have information here. But I will do a meetup to talk more about other companies, to learn more about them. People that I've met, team members, and so it's really good space. And there's, if anyone has kids, there's Pop Rocks, Digibyte Pop Rocks. You can have one.
That's awesome.
Yeah, so we're gonna go ahead. Are we on?
Yeah, I think we're
wow.
live, so.
We're live. Awesome. Okay, so we're live. Yeah, I'm gonna just jump in here beside you.
Yeah, perfect.
Hey.
So welcome everyone. We're gonna talk a little bit about trading today. So we're gonna run through a lot of different things about trading, everything from risk management to charting to managing expectations, and then some resources you can go out and look at after if you want to learn more. Obviously, this is a deep rabbit hole with trading. There's a lot of ways to do it, a lot of different assets, a lot of reasons to trade. So what I can do today, because we've got a pretty small group, I can sort of tailor this a little bit towards the audience more. So is everyone here more or less into crypto, or are we more traditional assets?
Practicing Forex.
Yeah.
No, that's it.
Okay, let's do hands up for crypto. Okay, that's a no-brainer.
So did you want to introduce yourself?
Yeah,
Or
sure.
do you want me
No, absolutely. So my name's Jon Connelly. I've been a trader for probably 10 years or so. Professionally, I manage a family office portfolio, so that includes pretty traditional stuff like real estate. I also run a small cryptocurrency fund, which is basically a discretionary portfolio management setup that I've had for a couple of years, which I'd like to attribute to my own genius, but there was a lot of fortunate timing there, being in earlier than the previous bubble anyways. Other than that, basically, I like all things trading from Forex to traditional assets, stocks, but crypto is pretty exciting. So that's been what I've spent a lot of my time on in the last probably 2 years. And there's also, more low-hanging fruit in crypto, and I think more of a vibe there that can be pretty exciting with people trying to push out the traditional monetary system and really make things happen and break stuff. And so it's been a good ride. And the thing with trading is the stuff that applies to Forex, to traditional markets, applies to crypto as well. So there's a lot of parallels there, and you can really pick whatever market you like. So I'll gear this mostly towards crypto, but we can look at some different charts. We can look at things like the S&P 500, the TSX. What I'll do today is I'll start with risk management, because risk management is ultimately the most important thing in trading, period. It's unfortunately not the sexiest thing. You don't see it on Twitter. People don't sell courses about risk management, but if you don't have it, you will not succeed in trading. It's just a matter of time, really. So risk management, basically, the first point I'll go through is how to build a trading plan. So what you want to do when you decide you're going to start trading is get a plan going and ask yourself a couple questions. So number one would be, why are you trading in the first place? So this could be anything from, I like picking stocks and I'd like to make sure my entries are a little more probable, or, you want to be a full-time trader and be in front of a screen all day doing Forex. Those are on the complete opposite end of the spectrum, but they're both totally valid. And you have to look at, what kind of trader do you want to be? Do you want to make a couple trades a month, maybe quarterly, even a few trades in and out of your RSP just to maximize your return? That's, obviously a different can of worms than trading crypto on leverage, for example. The other question you want to ask yourself is, how much do you want to make? And you need to set some realistic goals. Also, how much are you willing to lose? So you've got to be under the expectation that there's a possibility you're going to lose all your principal. And that's especially common starting out. Other things you want to consider too in a trading plan are rules. So,
Sorry.
no worries.
Sorry.
For some people, this is ultimately about knowing yourself. The mental aspect of this stuff is huge. So there's certain times a day where you get tired, you're more frustrated, more emotional, your kids are coming home, there's a lot going on. You probably shouldn't be trading during those times. So you really need to write out when you're going to have kind of optimal mental clarity, optimum focus, and that all needs to get built into your trading plan. So the last thing that's important in a trading plan is also building a trading journal. So we'll talk a little bit more about that later on, but ultimately that's about journaling each trade that you make, your entries, your exits, your expectation, and your risk reward. So how much money are you willing to risk in order to achieve the target return that you're looking for out of a trade? So to build a little bit more on risk management, we'll go back to big picture. Trading is really ultimately about two things. You can break it down into one, risk management, and two, finding high probability entries. So most of the time, you won't necessarily be able to determine, hey, is the stock bullish or bearish? You don't always know. Sometimes it's obvious. Sometimes your indicators will be firing. But what trading is ultimately about is finding a lot of those high probability entries, getting yourself into setups according to a good risk management setup, and wash, rinse, repeat. So you're never going to have, one trade where you're putting all your capital into it. That will end very poorly pretty quickly. So one other kind of really important rule that's a critical part of risk management, I'll bring up my trading view here. So you want to trade the trend. So trends, basically, is anyone familiar with those, like on a bigger picture? So the trend in Bitcoin right now, if we're on a daily, it's probably still bearish, to be perfectly honest, if we're looking all the way from this peak all the way down. But if we were to look at, say, the S&P 500,
Looks like 2014.
yeah. See the glare there. And zoom way out to a weekly chart. So if you zoom out to like the early 1900s, stocks tend to always go up. There's obviously massive interruptions in that trend, but ultimately with stocks, with most assets, the trend is usually up over the long term. So that means you're always going to have generally a higher probability trade buying the dip and going long as opposed to shorting. That's not to say you can't make money shorting, but if you're riding with the trend, it's going to be a lot safer. And this, can be extrapolated onto smaller time frames. So we said Bitcoin's kind of bearish still, but if we zoom into, say a 4-hour chart, suddenly, okay, that's looking a little more bullish. So maybe buying the dip is actually the better strategy until this changes, if it does. And there's a few ways to determine trend. You can use moving average crosses. There's a couple different cocktails. Nothing is really perfect, but ultimately just taking home that concept. So, if something is going up and up and up and up, it's probably pretty dangerous to short it. The third thing I would say with risk management is order types. So there's a lot of different order types you can use. There's limit orders, market orders, stop losses. Ultimately, I have a rule where you never use market orders, period. There's really no reason to if you're following a trading plan. If you've got an expectation for price and an area that you want to buy, you should be putting those orders in advance. That does two things. A, it prevents your emotions from clouding your judgment and you sitting in front of your screen and watching things move and saying, oh shit, like I need to buy now, click. And that usually leads to poor trades. And even on some platforms, if anyone here's traded on BitMEX, you actually get punished for putting in market orders. So they charge you 0.075% on the notional value of your trade for a market order. If you put in a limit order, you're qualified as a market maker, so you actually get paid a small fraction. And while that fee doesn't sound like a lot, if you're putting in a trade at, say, 50x and you bet $1,000, that's a $50,000 notional trade, suddenly 0.075% turns out to be like $300. So that's quite a bit of money. So we'll flip into some charting now. So most of what I'm going to cover today is more chart related. We'll start with just the S&P because it's a little simpler than Bitcoin. The cryptos tend to be, technical analysis works well on them, but it can be very difficult charting the bubble cycles because you have some pretty crazy extremes in price. So one of the things,
market cycle.
Exactly, yeah, market cycle trading, and we'll look at that in a minute. One of the things I almost always do is I use logarithmic scale, which basically just compresses the price axis to be a little more, it captures range better, basically, is what it does. So in terms of charting, simple stuff works pretty well. You see a lot of people on Twitter doing, they've got 10 different indicators on their charts. For the most part, for most people, you don't really need that. And in a lot of cases, a lot of these people posting charts don't realize that a lot of their indicators are pulling information from the same sources. So if you're using like RSI, stochastic RSI, MACD, those are all momentum indicators. They're, all a little bit different, but ultimately you're pulling info from the same source. So the first thing I'll cover is going to be really simple. So we're going to look at a long time frame here, and we're just going to look at trend lines. Just having trouble with the lighting here, so let's squat down a bit.
Do you want the lights out?
No, I'll be all right.
Yeah. Do you want to see what it's like with the lights out?
Yeah, sure, if
Yeah.
it doesn't mess with the camera too much. You guys are cool with that? That's good for me.
Is it?
Yeah, that's
Are we
fine.
good?
Yep.
Okay.
And actually, I'm going to cover one thing quickly before we get into technicals. So what a chart is exactly, does everyone know here kind of how to read candlestick indicators, what they mean? Ish. All right, I'll go through a quick little explanation. So there's a few ways to do a chart. We could flip this over to a simple line chart, but the reality is candles tend to work better and most people use them.
Can we? Oh, we can't show that on the.
Oh, is it not on the live stream?
No,
Ah, crap. Is there any way to do that?
I don't know.
Is that? Oh no, that's Meetup.
I can go ask.
Yeah, if you don't mind,
Yeah.
this would add a ton of value.
Yeah.
You can loiter for now. So I'll show you guys for now anyways. What a candle is basically. So whatever period you're on, so we're on weekly right now. Each one of these candles represents a week of price action on this asset. So if we go down to one of these candles here, basically what you'll see is there's a couple pieces of information here. So there's a wick, so you see these long tails and heads here, and then there's a candle body. So, and there's also a color, so there's red or there's green. So what this means, so the wick, the extent of the wick is basically the length of the price action in terms of top to bottom. So during this week here in, the 24th of December, price of the S&P 500 went from about 25.15 to 23.50. So that was the range. What the candle body represents, so you go to the bottom of the body and that's the open. So that's how the week opened. It opened down there at 2,400. The top of the body is where it closed. So basically this means we opened here, we went wham, and then we closed there at the end of the week. And if the candle's red, it basically means it's the opposite. So we opened the top of the body and closed at the bottom, and the wick represents the range. So that's a good little lesson on candles, and there's a few patterns that you can watch for in candles. I personally don't use these a ton, but things like little hammers, like right here, typically coincide with a rollover in the market. And long wicks are often a good sign for reversals, so that means you had a really big range and extreme in price over that period. And if we were to zoom this into a daily, so this would all be the same thing. So each candle body would represent 1 day of trading in this case. And you can see up there we had, this is called a doji star basically. So it's a really short candle body that basically reverses the trend. Are we, do you think we're able to get this up?
No.
Too bad. All right. We'll go through some different technical indicators now. So is anyone here kind of familiar with something simple, say trend lines? Perfect. So trend lines, all they are, basically you'll take the bottom of a trend and you'll try to find areas that look like they're on kind of the same axis. And if you can catch these early, then they can often provide support. So if we were, over here in time, this would have been the trend line we'd probably drawn. And you can see it kind of got smashed, so that one wasn't of much use. But the interesting thing is, once it broke below support on the trend line, that served as resistance. So that was a pretty useful visual indicator. So those are, very simple things, but they are still quite useful, and we find them on Bitcoin as well. We'll go over to another chart that I like to use here, which is total market cap. So this is one of the more useful charts that's in the crypto sphere. Don't want to say nobody, not a lot of people use this, and I think it's hugely valuable, so I would recommend taking a look at this. So what this is the total market cap of cryptocurrency. So in terms of crypto here, on the, that went really wonky. Holy smokes, that zoomed us way out. And I lost my axis. Big picture, exactly. So this only goes back, unfortunately, to about 2013, but it's still pretty cool. The most important thing with charting is you're always starting big picture. So like weekly or 3-day, and then zooming in. So on this, I would probably start and just look at it and see if there's a trend line here. Maybe there's a channel. So
Almost looks like an Elliott wave.
yeah, I can cover a bit of Elliott wave today
1,
too.
2.
Are you going to be using this for most of the presentation?
Yeah.
Okay.
I mean, I can.
No, because we'll just, I don't know, end the video, because it's not going to be very helpful for anybody watching.
No, I mean,
That's
I can work without it, but I don't have a ton of.
No, that's
A lot of my
fine.
stuff is visual.
Yeah, I don't want to change your presentation.
Isn't there might be a program just to like screen share almost, or like record?
Well, with YouTube, apparently there isn't, but do you know anything
no, just
about it?
What if we just turn the camera on the screen?
That camera?
It's pretty,
I don't
or
think we
your
can.
phone or
It's
something?
built into the TV.
Okay,
Like
there's gotta be a way. I mean, that's,
you would think you can share it.
is the guy down, he doesn't know, the guy downstairs.
No, he said you can't on YouTube.
That's a shame.
Maybe
Okay.
post it later or something. Just kind of combine them together.
Yeah, if there's a quick way to record this, I don't mind doing that. We could post it later.
Unless I just continue it from,
Yeah, from your phone and look at the screen. It's not ideal, but I think it could be okay.
what do you mean, like just?
Like if you set it up to record the TV. I don't know if that's too much glare or something.
Oh, I could try that. Then I have to end this one.
That's fine, yeah.
Okay, so do you know how to get to that other screen from this?
Like to reset all this?
Like, where is it up there? Is it, you'd have to find, where's the YouTube video?
Oh, it should be on. There we
All
go.
right, so we're gonna say bye to everyone because we are having technical difficulties. Okay, we can close it up.
Perfect. So end stream.
Yeah.